And up next, I would like to invite everyone to the attention on the stage because we're about to have our first industry dialogue today. The topic is Hong Kong's transition into an international carbon market. We're pleased to have as moderator Mr. Chiu, Head of Carbon and ESG Products from Hong Kong Exchanges and Clearing Limited. Let's welcome Mr. Chiu. Welcome. Thank you for being our moderator for this session. And I would also like to introduce you to our panelists, and they include Dr. William Yu, founder and CEO of World Green Organization. Welcome, William. Mr. Mohit Grover, partner, risk advisory from Deloitte, China. Welcome. Dr. Agnes Tai, head of sustainability investing and advisory, Arta TechFin Corporation Limited. Welcome, Agnes. Thank you for joining us. Professor Guang, Chief Scientist, Carbonpass, Guangdong, Environmental Protection Technology Group Company Limited. Welcome all. All right, so Ken, the stage is all yours.
Thank you. Please take a seat. So ladies and gentlemen, good morning. My pleasure to moderate this carbon forum. Hopefully this is not the least technical forum because we have a digital focus today. But I think carbon has been a core focus for Hong Kong, no matter it's in real economies or financial industry. There are a couple of things, of course, Hong Kong EX have been doing, like the launch of Core Climate last year. But it's more importantly that we would like to use this forum to share with all of you, like in the corporate side, financial institution side, how do they step up to take more initiative and efforts to decarbonize and embark in a net zero journey? And of course, I think in the carbon space, there are a lot of technological solutions that can be applied to enhance the overall process. And that's why I think today we have a very good mix. I'm a moderator because I'm not a doctor, and we have a couple of doctors on the forum. So I would love to introduce you one by one. First one, I have Dr. William Yu, the founder and CEO of World Green Organization. Mr. Mohit Grover, the partner risk advisory of Deloitte, China. Dr. Agnes Tai, the head of sustainability investing and advisory, Arta TechFin Corporation Limited. And then we have Professor Zhang, chief scientist, Carbonpass, Guangdong Environmental Protection Technology Group Company Limited. So I know the time is very tight, so we go straight to the topic. And today we're going to cover, I think, broadly around two key aspects. The first one is to understand the global landscape of the carbon net zero journey and what Hong Kong has done and what we can do. The second one is some of the technological application, different part of the carbon value chain. So I think those are the two things we want to cover. And we'll have to throw the first question to Mohit. So could you please give us a quick recap on the global market development in the carbon space and how Hong Kong has been doing in this area?
Thanks, Ken. Very pleased to be here, and also great to see the crowd that we see outside in the exhibition convention center. Looks like things are very much getting back to normal. So Ken, to your question, carbon markets have been there for more than 20 years, and they have been used as a solution to facilitate the adaptation and mitigation against the climate change. Now, as the climate change in itself has become much more prominent, much more mainstream, the need for us to act, carbon markets have also been growing in prominence. More than 2/3 of the countries globally either have or planning to set up a carbon trading platform, be it more from a regulatory standpoint or from a voluntary standpoint. Now, what is essentially the purpose of the carbon market? That is threefold. The first one is that countries have pledged their commitments to Paris Agreement, and through that they are looking at driving carbon reduction based on what we call as NDCS, nationally determined contributions. Now, carbon markets are expected. Now, these would require significant investments, significant changes in the ecosystem. Carbon markets facilitate that from an investment standpoint, and by 2030, over half of that investment required could be funded from carbon markets. So that's a very significant role carbon markets are likely to play. The second one is we know that in the decarbonization journey, there needs to be a lot of innovation, there needs to be a lot of digitization, and that requires investments. So having a market-driven, sort of a capital market structure for carbon could lead to the investments and smoothen the investments that are required by innovators to introduce the solutions, because without those, we will not achieve the net zero targets that we are setting up. Third one is obviously organizations, and many organizations in Hong Kong and globally have made commitments towards driving net zero by 2050 or carbon neutrality by 2060, aligned with the Hong Kong plans. Now, it is quite clear they will go through a lot of efforts to reduce, to eliminate carbon in their value chain, but there would be some residual carbons for which they will need high quality offsets. And this is again one of the purpose of carbon market, is to provide that option so that they can fund other projects through the carbon market that drives carbon reductions for the part that they are not able to. So I think it's the fact that climate change is now so mainstream and with strong urgencies to act, this decade is going to be quite crucial for carbon markets to be more successful, to be more viable, and to be more adopted in the economic setup. For Hong Kong, it's great. We have the Core Climate Platform live. I think the initial success has been, the response has been great. More needs to be done, and I think that's something we'll continue to talk about. I think there are areas through which this platform and role of Hong Kong, and we heard in the morning in the address that green tech is something that's going to be a key focus for Hong Kong. So those are the areas where the carbon market in Hong Kong could help to facilitate and drive. So back to you.
Thank you, Mohit. I mean, couple of points, I mean, key points, right? Three aspects that super important point that Mohit has raised. And then there are more platforms around the globe going to set up or has set up, more people stepping up in the carbon efforts, more investment need, more technological innovations are required as well. Now, the next question is, I mean, in harmony to what Mohit has mentioned about like more platform, more locations, more jurisdictions want to step into this space. So we're seeing increasing competition between like global financial hubs to lead on the carbon market. So how Hong Kong can step up? And this question for William.
I think you may agree this question should be answered by Hong Kong Stock Exchange, right? They have the authority to build and lead the carbon market. But anyway, I try to share my views from a climate or carbon expert perspective. I think we need to address the most fundamental issue, that is the nature of carbon credits. So what kind of carbon credits we want to generate, to certify, and to trade in Hong Kong or global market. So as you know, if we want to build any type of financial instrument, we need to establish trust, giving confidence to the market. So can we treat carbon credits merely an environmental tool to cut carbon emission, or it's not sufficient? Maybe we need to find ways to convert them into carbon asset, okay, including them in the asset class that financial expert can handle. For example, treating carbon credit as a kind of commodity under SFO, the Securities Future Audience. So in the future, I would suggest, especially for core climate, they play the key role to add more products, to include more international standard covering the value chain, so as to attract more users that have synergies in Hong Kong financial industry or the green economy. So this will, on the other hand, I think liquidity is a key area, key aspect that we can consider partnering different financial institutions like bank, how we can further leverage their network, their expertise. I think that's very important, how to work along, across the entire climate value chain. So back to my key point is, we need to start to give official definition to carbon credit, to define, the carbon credit, just like how we define the securities, our financial derivatives. I think that's very important. So back to the basic, I think for a bigger infrastructure, the green infrastructure, Hong Kong, we need to start with green taxonomy and also, to work on the definition, content, and boundary for carbon market. Then we have the recognized financial asset, be it from FERA, from Gold Standard, or IREC. But we need to have more details in order to go through the legislative process. I think it's important. Imagine the carbon credit is a virtual asset, a product you cannot touch or see. You may see the forest. You might see the data from remote sensing, but you don't see the carbon credit itself, okay? So how we can increase the credibility of this financial asset? I think a more defined certification, verification process is highly needed. Then we can go for some other green financial instrument, to further work on the carbon credit, pledge loan, LC, and bonds. I think that's very important. Maybe I stop here and, yep.
I'm not going to reply and address like what William mentioned, but from Mohit, a very high level point, and then down to set the scene, and then to William, there is a very interesting two parts. One is about how do we make things more visible. I can't see carbon dioxide in the atmosphere, but how do we visualize carbon credit? So there is an aspect of using it, and there is an aspect of investing and taking it as an asset. So that's why I think I want to set, the next question is for Agnes, because your company is a TechFin. So how do you see, the climate change entail the whole economy transition? Like, what is the consequent risks and opportunities, and how investor, I take it a TechFin, as a view, like how to act upon this? Yeah.
Thank you, Ken, and thank you for DES for having me. So capital is really fuel for growth. Capital that is channeled to projects and companies that have a positive climate impact will be fuel for a low carbon transition growth of our economy. So investors play a very, very significant role, as do regulators. So in Asia economies, Asia markets, we see that the two main driving forces of anything that is supposed to happen would be regulators and also investors. So Mohit mentioned the types of projects, and it's going to be a very important tool for corporates. And William mentioned trust and integrity, especially verification. So for investors, we really need to see that the carbon credits in the voluntary carbon markets are quality credits. And quality credits will have to have the characteristics of additionality, of permanence, and also of transparency of monitoring and verification, and also reporting. So we feel that the voluntary carbon credits market is going to have a very high demand, mainly because of investors decarbonizing their portfolios, which has been happening in the last 7 years, if not longer, in Europe, and also the recent regulatory developments. For instance, in Europe, we have SFDR, which funds can be labeled as Article 8 or Article 9, whether they are having characteristics or objectives of sustainability. So sometimes in layman terms, we call them lighter green, darker green in layman terms. But also there are other regulations like the CSDDD, like the CBAM in Europe, and SEC in the States are going to come through. So a lot of regulations are pushing behind investors into demanding portfolio companies, investees, to really do their decarbonizations right and do it fast and have a good target. But there are a lot of companies that have very hard to abate emissions. And for these companies, no matter how hard they try, it's not going to go to zero emissions in 5 years. So in the short term, before green technology at scale is available, they have to go to a carbon market, if not the compliance market like those in Europe or in China now, would have to go to a voluntary market like Core Climate to buy the offsets so that they can fulfill their targets. So this is a very, very important development. But I would just leave with a last thought, and that is we all talk about all these things, which are, I think, still peripheral, because the underlying issue, as IOSCO had a consultation that ended in February in both the compliance for carbon market and the voluntary carbon market, and in that response, I presented that the legal nature of carbon credits of each jurisdiction has to be unified. If not, we're like having beef from Argentina, from Australia, from Europe, from New Zealand, every part of the world, put into the same blender and mince it, and then comes out, you make meatballs. If that meatball is a carbon credit of a portfolio of things that have different definition of legal nature of that original carbon credit, then it's going to present some trouble in the future. So this is a conversation or something that's left to the regulators to decide.
Thank you, Agnes. Loud and clear. And I think Agnes' view is in line with what William mentioned, and both speakers mentioned about regulators' definitions, quality. I think that is a very, very clear aspect to fill in. Now we turn to the next aspect, like what William mentioned, other than investment, that we'll be using the carbon market, and like Agnes also mentioned, the corporate, they are trying very hard to decarbonize, to pursue the net zero journey. But then carbon footprint assessment has become an issue, not an issue, but a topic that corporate business will need to study in order to set the goal and involve technology to a certain extent. May I throw the next question to Professor Zhang, how technology can help those corporates achieve all these goals?
All right, so firstly, I want to just briefly introduce the carbon footprint. So carbon footprint refers to the total greenhouse gas emissions that are produced during, by a entire lifespan of a product. And those emissions, they are produced, they're generated from the extraction and processing of raw materials and transportation, manufacturing, use and dispose of a product. And so at present, we actually have a lot of standards for calculating the carbon footprint. For example, the ISO 14067, PAS 2050, GGG protocol, etc. And most of the standards, they are mainly based on the in-depth life cycle assessment research around focusing on a specific product. And for life cycle assessment, we call it LCA. So this is a method that which is very famous in our area, and this is widely used for assessing the life cycle environmental impact of a product, and it has many indicators. For example, the water use and energy consumption and soil use utilization, and carbon footprint is just one indicator among them. Except for life cycle assessment technology, we also have a lot of new tools or technologies emerging recently. For example, we can see a lot of carbon footprint, accounting systems or carbon management platforms that integrate the blockchain and big data technologies. Yeah, Thank you.
Thank you, Professor Zhang. Loud and clear, I mean, life cycle assessment, I mean, there are technology that can be applied to assess the footprint. So I think that we're controlling the time pretty well, and we cover like the high level market landscape on Hong Kong role, how to step up, and then we have two, investment, and then corporate on the carbon footprint. Now we try to go a little bit deeper for the benefit of the audience. I think a couple of us have mentioned about regulation, and I also, I mean, Agnes mentioned explicitly that they issued the consultation paper for both the compliance and voluntary carbon market. So what should be the role, I mean, question for William. So what should be the role that the international standard setting bodies and regulators should play, and how this will impact the future development of the Hong Kong international carbon market?
Yeah, I also, you know, they have to address all these concerns. They have introduced 12 recommendations to deal with the primary market, the market integrity, the market transparency and structure. So I try to briefly mention about this. Recommendation 1 to 5 relate to primary market, suggesting the authorities should pursue options as opposed to fee allocation when they consider to allocate the allowance. That will improve the price formation and active participation. I witnessed a kind of failure of carbon trading back to 2007 when I was in the UK pursuing my PhD. You know, the authority reset the carbon price to 0. Okay, mainly because they don't introduce option mechanism. Now the EU ETS, they are entering the fourth phase of development, while China market may just start, okay, kick off the first phase of development. So option, how to control the amount is very important, how to allocate those allowance, the permit to all these corporations. And another recommendations from recommendation number 6 to 8 mainly deals with market integrity. So the legal certainty of the nature of allowance, and also, you know, the strict market reporting in order to reduce the systemic risk, to enhance information transparency, you know, all these are very important. And the final recommendation, number 9 to 12, mainly is about the transparency and structure of the market. So how we can regulate the infrastructure, the trading venue, the platforms, the standardized contract, as well as the clear rules for, you know, the functioning of secondary trading markets. I think all are very important. So now for voluntary market, we face unregulated, no governing body, no centralized trading platform, or agreed methodology, different standard, different methodologies that constitute a carbon credit. So we also no official definition about high quality carbon credit, no definition, okay? So the inequality of those credits, the accreditation process, all these need to be addressed. I think our panel members have already mentioned this. So back to your question, what regulator, you know, what Hong Kong government should do? I think using this, we understand there's a fragmented system. We have EU ETS, we have the largest China carbon trading market, you know, all this, but they don't communicate with each other. If you want to buy the carbon credit to do the registration, a very complicated process. So what to do? Some people might argue, use tokenization, okay? But how to address, how to do well in KYC? How to avoid money laundering? I mean, if we go for this tokenization approach, especially how to support the SEO, I think it's still very challenging. I don't have the answer. So how to avoid the market manipulation, you know, all this. I think so. That's why we need to address all this market integrity, the product quality issue. As this is a digital, conference, so I would say we already start green bond tokenization recently by Hong Kong Stock Exchange, but it merely serves as a kind of ledger, I would say, to record the transaction using blockchain to do the booking, okay? So, again, we might consider using blockchain to do underwriting, involving auditor, lawyers, SFC, regulator, stock exchange to do verification for all this carbon credit from different projects. And hopefully, we start from the beginning to oversee, to monitor all this project development, verification, certification. And finally, to make good use of technology, the FinTech, we can have a better data traceability, to increase the transparency, and automatically that go finally to core Carbon platform, okay, to do the trading. That's perfect. One-stop service for Hong Kong. It sounds very attractive. So what I want to conclude is to make good use of digital power, professional knowledge to build this infrastructure to connect both international and China market, okay? And also, consider to shift from not only institutional players, but also individuals in the future to make carbon credit more popular. In China, they call it 碳普惠, 碳保卫, but that is a long road. We should talk less about political, but more scientific aspect. So Hong Kong can play a role to use different standards to see the difference, either in methodology, in verification process, to narrow down the gap. I think Hong Kong can use scientific evidence approach to justify the standard they want to promote, the credits they want to see, okay?
We need more people to work on all this. But I mean, William make a lot of points. Actually a lot of details, but all are valid points, including the CCM issue, VCM concern. And I think he repeats a couple of times on transparency, integrity, definition, try to enhance the credibility of the market. So definitely there are something the tech can play a role. He raised about KYC and things like that. And use of tech. How do we, going back to core climate, right? Those are the things that I think we all would love to explore down the road. But now, focusing on the quality and the transparency, I think William has mentioned quite a couple of points. But for Mohit, from your perspective, are all these really all the challenges, or do you see anything that any mitigation, how we can overcome all this?
No, I think, William, you covered quite the core issue, which is lack of guidelines and standards, and also the fact that the markets are fragmented. Yeah. So compare these carbon markets with the financial markets, right? So there's a huge amount of difference. So what else should be considered? I think going back to the word trust that was used earlier. And carbon credits is not only for governments and private organizations, it's for individuals. So many of you may have purchased carbon credits when you take a flight, right? I was just reviewing one of the major airlines globally, and they have introduced a lot of innovation. The innovation provides the consumer the information they need to make a decision and start to trust that the money they're investing is actually going into the right set of projects with the right governance. So not only they describe the project, they have a sliding scale where you can actually move the years of impact. Carbon credits sometimes are thought, that the impact would happen after 50 years, when maybe up beyond your lifetime. So you want to have an impact in the next 3 to 5 years. So they allow you to choose. They then give you the information about the projects. Then they also define exactly how those projects are generating the credits. So that kind of transparency enabled through digital platforms is going to be one of the key contributing factor for building more trust in the carbon markets. I think the other one is that, again, looking at more Hong Kong, we need more local projects, yeah? So, you know, it's okay to say forestry in Southeast Asia or in Africa or something like that. We need more local projects. We need more collaborations with regions like GBA, Hong Kong and GBA to come together and look at how we can create those projects which are touch and feel and more visible to the community in Hong Kong, and that will drive more trust as well. So a couple of additional points to what William had covered earlier.
Thank you, Mohit. I mean, use tech to visualize, enhance trust, and more local projects. Looks like there are opportunities as well. So question for Agnes. So how do you see the market evolving in the next decade, and do you observe any investment opportunities in this space and tech as well?
Ken, this is a really great question because the opportunities are always there. We need liquidity, as Mohit and William alluded to. We need liquidity in a voluntary carbon market for price discovery. When we have increasing liquidity and maturity of the market, then we can have indexes, we can have ETFs, and we can have derivatives of that carbon market, which further enhance liquidity. Now, I just give you an example. Like in the early 80s, I was a spot trader for a very short period of time for a major bank. And TT means US dollars, Hong Kong dollar. And that was before, during, and after the peg. It was a very volatile market. And in those days, we could trade like 20, 30, 50 million US dollars in one price, which is a very tight price, or we could trade up to $1 billion US dollars in dollar yen in those days, in the early 80s. That tells you the liquidity. And why is that? Because forex markets and commodities markets have an asset classes. They are asset classes which are very standardized. But for carbon credits, as Mohit was going to be telling us, that it's not standardized, right? It all depends on the type of projects and on the vintage and on the jurisdiction. If we do not solve the underlying question of what is the legal nature of carbon credits in each jurisdiction, then it's going to be pretty hard for us to connect. The easiest way to connect for core climate would be with Beijing Green Exchange, because they just started a consultation in February, right? We have a very successful Stock Connect, so possibly in the future, Carbon Connect. And when the Greater Bay Area has a unified voluntary carbon credits market or a unified compliance carbon credit market, then it can link with the national Shanghai ETS. And Hong Kong is a designated green finance hub for the Greater Bay Area. So I believe Hong Kong will have a great role to play.
Thank you, Agnes. I mean, really running short of time. Final question for Dr. Zhang. So can you, from a forward-looking perspective, any recommendation for how do you make use of technology to help the corporate in the net zero journey and assess their footprint?
All right. So firstly, I would say this situation is kind of inevitable for most of the enterprises because in the context of globalization, so more and more enterprises, they have already undertaken the task of decarbonization. And so regarding the technical problems, I think actually during recent years development, we already have a pretty good foundation for solving this problem because we have a lot of standards and they can provide us relatively clear guidance for us to conduct the carbon accounting. And as long as the enterprises, they communicate within their industries towards carbon footprint, I think it's also easy for them to fund, consult institutions or service companies for them to help them to solve those problems. And for the cost, I mean, well, I have three suggestions for them. And the first one, I think they should prepare this work, in advance, because in the so as we can see that in the global supply chain, we have increasing demand for low carbon products, and so if we can make all of the carbon related plans earlier, I think since the carbon price right now is pretty low, so I think in the future, if we do all of the work in advance, I think we can cut our future costs. The second suggestion, I would say the enterprises should do better, data management, because data collection is kind of, it takes up a lot of manpower and operating costs. So if they can manage the data, for example, the consumption, energy consumption data, and logistics information, setting information. So I think this will help them to reduce a lot of costs. And lastly, I think if they promote their carbon neutrality actions, this will also be helpful, because carbon neutrality actions they can help enterprises achieve better or high quality development, and also even lower the operating costs, because it provides us some chances to reduce our energy use and improve our technical level. So I think thereby they can also obtain more economic benefits, I think. Thank you.
Thank you all. I mean, time is really running out, and we can talk for another 30 minutes or 1 hour. But there are a lot of points, good points that raised by all the speakers, and really thanks all of them. And that actually, absolutely, technology can play a role to address, one, the market level question, filling in the details, trust, credibility, transparency. And second, on the level on using technology to monetize, visualize the data, and to help the corporates to embark the net zero journey. So that's conclude today's panel, and really thank you for your attention. Thank you.
Thank you very much, our panelists.